From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, good afternoon to you. Hello. This is the COB. I'm Nadine Blaney.
I'm Kyle Rodder, and well, I did notice that in the final moments of trade, they were trying to claw back into positive territory. Let's see, we're about to finish up now on the CBO 200. What's it going to be? Down 0.1%.
Yeah, I mean, I don't know, when it's this lackluster type of trade through the afternoon, you start to feel a little, like this Monday had been dragging a little bit. I put my hair in a bun. I was getting all ready to go, and I realized I had a date with you.
Yep.
The COB Australia index down by 0.1%. When I look at the market map, though, Kyle, I mean, it's really patchwork, isn't it? There are pockets of strength in the material space. Pilbara, we're talking about Alchem. We'll get there in just a moment. Energy did well off the back of oil prices.
Yeah, utilities and real estate actually might be a good segue right into the three themes, actually, because some of the areas of the market that did perform okay was those sort of yieldy, sensitive sectors.
Good word.
Yeah, it's a technical language you pick up after years in the game. But it was those sort of yields fall defensive rise with the real estate and utilities stocks. But as we said off the top, a bit off the back foot really to start the week. We've got a lot of data coming through. And a lot of that's because of earnings season. Yeah,
it is. One of the more defensive names traditionally that did not do very well today related to earnings, see how I'm tying this all in a bow, ResMed. So we had the brokers coming out in ResMed, and look, defensive healthcare down today further, close to 4%. The brokers weighing in on that one. So that's always so key as well. You get the results on the day, you get the initial market reaction, and then you get the follow through sometimes. When these brokers come through, Morgan's cut its its price target, Morgan Stanley cut its price target, Macquarie cut its price target, Citi, Wilson's, Goldman Sachs, RBC Capital. That's a lot of cutting.
Yeah, it's not a stock that I follow particularly much, but from the few guests that I've spoken to about it over the last few days, just perennial disappointers, basically. And it's sort of surprising in a way that we continue to let ourselves be hurt.
Well, I don't know if it's a perennial disappointer, but it often does have a negative share price reaction on the day that it reports. And oftentimes, the follow-up is quite good for ResMed, not to totally disagree with you. But, I mean, this one, it looks like, fundamentally, there was weakness that was seen that was not very welcome at all. It's profit and revenue missed expectations. Anyways, so we've got the market on the back foot. Let's just flesh this out a little bit further for you by taking a look at some of these sectors. And speaking of, here's the healthcare names. So, CSL. And when you see CSL down by that much, I say it often, but that's a hefty chunk out of the market considering its market cap.
Yeah, without a doubt. So that was weighing on things. ResMed was actually down by 4% by the end of cash trade. We'll go over and flick over the page too, because we've got another set of the healthcare stocks here. A little bit more positive, I suppose, if you look at Pro Medicus for the day and what have you. But indeed, CSL down around that sort of $260 per share mark, again, a fraction higher than that, and then ResMed too, a huge weight on the healthcare sector and the broader market as a result.
Miners, okay, so 6 out of 11 major sectors were lower, and that includes the materials space overall. As I mentioned, the big, utilities, there we go, that's one of the more yieldy, as you called it, areas of the market that actually did pretty well. So we're going down, up, down, up. Anyways, miners, the big boys, Rio Tinto, Fortescue Metals, all looking a bit weak. But as I said, we did have lithium looking okay overall. Pilbara talking about an extension of a resource at one of its mines, and gold did all right as well, generally speaking. Of course,
it's a grey up there, Bellevue up there. Pilbara was top of the pops today, up 3.4%. Again, we have to wait to see where cash closed in. Lake Resources, though, was very weak. I'm sure we'll get to it more a little later on when we actually look at the leaders and laggards. But just worth mentioning that it was down by 18% for the session, and I had the news up here and I wanted to quote it verbatim. Can't quite find it, but it was a big drop for the day. Yeah,
Lake Resources down by close to 17%. It did have to answer a query coming to it from the ASX.
And answered it inadequately, apparently. A little bit hazy on its production guidance. That's what it was.
Yeah, well, you would assume by that share price reaction that something was not impressive, to say the least. Okay, look, let's be honest. Yes, we're in earnings season, but there wasn't tons and tons of results coming out today. We've got to wait sort of till midweek. But we did see SDS shares in focus, finalized a deal to be taken over. Yeah, private capital, Bain Capital, $827 million.
Another one off the market.
Yeah, this market
gobbled up.
feels
We're not
as
going to have
if
an
it's
ASX
shrinking.
left soon
We
at
won't
this
have any
rate.
tech companies on the ASX soon at this rate. GUD Holdings was another one, so it sold a business. It's a water business, and it sold it to Waterco. I love these names.
What do you reckon they do?
With an enterprise value of $65 million. So that's expected to be complete by end of September.
Yes, September 1st, I believe it was,
okay,
actually, if my memory serves me well. But also, Invocare, in a trading hold, and well, some funny business going on there. TPG Capital citing due diligence findings that point to lower earnings going forward. So that's going to be in a trading halt until Wednesday now, when Invocare will release the announcement. But I think another technical term for that is playing funny buggers.
Oh, okay.
Trying to get a cheaper valuation there potentially on the business. But we'll have to see again. The share will be back trading. It is assumed on Wednesday.
Every time I see Invocare, I just think death and taxes, death and taxes.
Yep.
All right. New Zealand, we spoke with Brad Gordon from Hobson Wealth in New Zealand this morning. We had restaurant brands coming out with a profit warning, tipping full year earnings to be at about half of that of last year. So why? Inflation, input prices, lower than expected sales in some places in the state. So that is a bit of a harbinger, perhaps, of what's to come when it comes to some of these details from the upcoming earnings season.
Higher costs, lower profits, higher costs, lower revenues. I think that's what we're all worried about. So yeah, I think that was shining through there just a little bit.
You know what is going to be a real focus this earnings season as well is these discretionary retailers. I think that's going to be just a key theme. Citi Chic is one of those companies that we know was a market darling for a very long time in the small cap space, and then it ran into huge problems with its inventory, and it looks as if it's gone a little ways to rectify that. So it's sold its MENA, so it's Europe, Middle East, Africa business, Evans, and that, according to one of the brokers, will allow it to channel capital toward generating better returns in existing regions. So it's got a new target price of 70 cents per share. These are broker moves that we had at today.
Yeah, indeed. Okay. New Hope as well was downgraded to hold from at Morgan's. Interesting one. It's reduced its forecast for the coal sector due to lower price estimates and higher long-term costs. There we go again. Yeah,
Citi, Pilbara. So saying it's operationally years ahead of its peers thanks to expansion at its WA operations. And on that, as I said, Pilbara did come out today. Shares are up by 4%. Diggers and Dealers Conference, don't forget we've got that going on in Kalgoorlie, I think from the 5th to the 9th. So we've been in contact with a lot of the companies that are presenting there. And Pilbara today talked about a substantial increase coming through in its mineral resource at one of its sites. So that is exactly what the market wants to hear from guys like Pilbara, you know, these actual producers. So I have so many conversations with our guests about, if you want to be in lithium, do you want to be with the explorers? I'd say, what do you think? I'd say the vast majority say be with the producers, Pilbara,
Yeah. Well, I mean, go for the biggest, ugliest one that's digging stuff and selling stuff right now, I think is generally the refrain.
But it was the stock of the day. David Lane from Ord Minnett, Daniel Ortiz from Lincoln Indicators. Let's see what they had to say.
Has the advantage of they've actually been around for about 5 years now in operation, so they've probably been able to take upon their early operating kind of history and be able to grow and perfect that over time, whereas many other companies who are getting started are probably behind the benchmark there in terms of understanding the processing here. So like you mentioned, I think Pilbara do have a lot of advantages here, and in terms of prices, they're still making like 90% margins, operating margins. So it's if the prices fall in half, they're still making margins akin to the iron ore miners. So, a lot of room there for margin.
They're very well positioned as far as that's concerned. As Daniel said, they've got a significant amount of cash, about $3.3 billion of cash. And that's actually increased by $664 million in the last quarter. So they are definitely a leader as far as that space is concerned. I'd be buying it at the moment. I think it's a good long-term business.
Okay, so pretty constructive there on Pilbara. Again, the biggest player, the most productive player in the space. So perhaps was it a double buy? Would you?
I think it was a double buy.
Okay, is it already in the investment portfolio?
I don't know.
Really? No lithium in there yet? We'll have to double
check. No,
there's
lithium. I'll have to double check.
We'll have to double check.
Take that on notice.
Yeah,
Kyle,
exactly.
thank you.
No.
Carry on.
Carry on indeed. And we'll carry on to our guest for the COB. Josh Gilbert from etoro is standing by. Josh, we're talking about whether we've got any lithium names in our investment committee portfolio. etoro clients, are they still loading up on lithium names?
Absolutely. Yeah. Look, definitely. It's still a name, whether it's the lithium producers, whether it's the sort of the EV guys that are buying the lithium. That is what the investors are sort of really looking at here. They're looking at clean energy as that big theme, and it's been the focus for months and years now.
Indeed. We've got a big week ahead of reporting, Josh. I guess it's sort of really the rubber hits the road a little bit when it comes to volatility in some of these local stocks. Yeah,
absolutely. Look, big week. We're obviously coming off the back of the second consecutive pause from the RBA last week. They gave a nice boost to the ASX. We've had 2 good months from the ASX as well. It was 3 weeks before the sort of the down week last week as well. And a lot of that optimism is coming from this idea that the RBA is sort of beginning to wind down its sort of tightening cycle as inflation comes down, and this idea that investors now believe that we can avoid a recession that many economists had once said that was sort of nailed on pretty much, and the same in the US as well. And I think reporting season is obviously now going to be that next catalyst to obviously try and bring monthly gains to sort of 3 months. I think what we've got to look at here though is that the expectations coming in are that we are going to see a pretty poor earnings season, and the idea of that I always find is quite nice is that that does leave a little bit of room to the upside sometimes as well for some surprises, given that I think that there again all of the talk is about how bad this is going to be, and what we found particularly from US earnings season is that sort of profit cliff just sort of never really came. Even US earnings right now in the second quarter are beating expectations. I think we from Friday we were earnings had declined just around about 5% in the quarter, but many were calling for about 7%. So as you say, we've got some more prominent names really rolling through this week. Obviously Commonwealth Bank is obviously going to be the biggie. I think it represents anywhere between about 7 to 8% of the index. So when a company like that reports, it's going to have a big focus for investors on the index. And look, again, the focus there as well is going to give us a reading on the general economy. Also, given that it is one of the largest retail banks. But yeah, net interest margins is obviously going to be the focus. Loan growth, that was sort of what they'd guided at being weaker in this second half of the year after reporting record results, I think, in the first half. But that guidance was what put the share price down. And I think their guidance into next year for the fiscal year is probably what will move this stock when it reports, particularly on that sort of loan growth front and any sort of conversation around sort of the general idea from the economy. Because yes, we might have seen the end of the RBA's hiking cycle, but it doesn't mean that we aren't going to see rates higher for longer.
All right, Josh, look, that's here locally. We've got the big US tech companies and their reports under our belt. The retailers come still. What have we learned from US quarterlies?
Yeah, so as I say, so far it's not been as bad as we'd expected. 79% of the companies that are reported so far have come in above estimates. That's above sort of what we've had for the 5-year average. As I say, we're about 5% earnings decline. The market was expecting about a 7.5%. I think the good news for investors though is that this is the trough of the earnings slowdown. Earnings growth should pick up in the second half of the year. Q3 and Q4 are both showing positive so far. We know that obviously those earnings revisions can ultimately come in, but it has been a bit of a mixed bag so far. We obviously had Amazon with a pretty big beat last week. Operating profit was more than double what the street had expected. Apple saw sort of a bit of a slowdown. But again, I think the general consensus and what I found throughout this earnings season is that, okay, we're seeing the bottom here. This is the worst of what it's going to be. Advertisers are seemingly coming back when we look at sort of the likes of Alphabet and Meta. So corporates are spending money again. Same with sort of cloud growth across Amazon and for Microsoft. That was more resilient than many had expected. Couple more names this week as well. We've got Palantir. That will be nice to see if sort of this AI tailwind is sort of continuing, and if that buzzword can actually translate into actually financial contributions for a lot of these companies. That will be sort of the first reading we get. Then we have obviously Nvidia as well. And then you've also got Disney this week as well. So Disney will be one to watch from a consumer standpoint to see how sort of they're faring. Again, whether it's the Disney Plus side, whether it is the parks, those will be two names that I think stand out this week.
Josh, on the macro front as well, of course, we had the jobs data on Friday night, seemed to set us up for a bit of a weak open this morning. But I guess it's going to be back on inflation this week in the US and probably in Asia as well.
Yeah, so I think the jobs number on Friday was, again, pretty mixed. I think it was ultimately, I think the unemployment number, I think fell. I think it was down to 3.5%, and that was the lowest number that we'd seen for sort of decades. But that is contributing to consumer confidence. I think we're going to see that pick up in the US again. If we've got a strong jobs market, as many people will know, that's going to paint a bit of a positive picture for sort of growth. And the data supports that narrative that the US can keep inflation under control without sort of forcing a recession. Obviously, they haven't closed the door on hikes yet, and as we say, we've got plenty of data to sort of still roll through. We've obviously got that inflation print this week, and that will obviously give us a nice understanding of, if the Fed are done for now. Core will be the sort of the focus. Headline inflation is set to pick up slightly to 3.2% from 3% in June. But again, we've made significant progress. We were at 8.5%. 12 months ago, and obviously last month we had 3%. So that has obviously brought us to where we are now, which is the market's believing there's only a 17% chance that the Fed will hike in September. But as I say, huge amounts of data before then. We've still got 2 CPI prints as well. We've got oil picking up quite significantly. Oil's up about sort of 15-16% in the last couple of months. Saudi Arabia and Russia have sort of both extended their output cuts as well. So, that could feed a little bit of headline inflation. But again, I think core will be the one that investors focus on this week. And if that declines further, I think that could be the line in the sand that investors are sort of looking for to sort of declare maybe the end of the Fed's hiking cycle.
Josh, really appreciate it as always, helping us preview what's going to be another big week in the financial world. Hope it's a good one for you. Josh Gilbert from etoro.
See you, Josh.
Thanks, guys. Have a great week.
And I know you peeked at my screen there, Nadine. I did want to check if we had any lithium exposure in the investment committee portfolio. We do, but through Mineral Resources.
Mineral Resources, not Pilbara. Interesting.
Yeah. So okay. I don't know when the next episode of the investment committee is, but Pilbara will be there.
Yeah, I look forward to that.
Cool.
That's beginning of September. It's always RBA day, although we'll have to adjust our thinking next year when the schedule changes for the RBA. All right, shall we, market leaders?
Yes,
yeah,
let's go forward.
Let's see what happened here. Pilbara.
There we go.
Word
our
of the day. Yeah.
Pilbara Minerals up 4%.
GUD after that sale. I've got to check in when GUD reports. It's usually toward the beginning of earnings season. I really hope we can get that. Look, Lynas is one of those companies that is presenting at Diggers and Dealers. It was out with a quarterly production. Gosh, was it last week or the week before? And it was taken really well by the market. It also updated on its processing ambitions in WA as well as in Texas. So yeah, these are all looking pretty sweet on what was a pretty lackluster session, you've got to say? Yeah,
maybe a little bit of a bounce for Link there, of course, getting taken to the cleaners over the last few weeks after a pretty unsettling update perhaps. Let's go to the laggards now though. And Lake Resources, we spoke about that before, just in terms of perhaps some of the ambiguity there around its production guidance. So that's, shareholders have absolutely punished it. Block as well, though.
It was reported last week,
didn't it? Last week.
I actually didn't follow it very closely because I think it was after the market close on Friday.
Well, the numbers beat, but the guidance was poor, and a lot of the profits were from effectively Bitcoin.
Oh,
so
good.
Nothing to do with the business, really. Just a crypto hedge fund kind of sort of trade there. So it's down still again another 10%. I don't think there's been any further news on the back of that either. So I think it really is just the knock-on effect from those results. Funnily enough, too, a lot of lithium players sort of bookmarking the market. So core lithium there's down as well. Sierra Resources, which is more sort of rare earthy, down 4.73%, and we already spoke about ResMed, just the follow through there from the broker downgrades.
Yeah, okay, this is where I get put to the test.
Hey.
What small cap news can I get across? Well, Australian Strategic Materials, we will fix that name in our system. It announced last week that it had done a deal with a Korean firm that will be using its one of its alloys in a plant in the US. So still getting a good bump up off the back of that, up by 13%. And flipping the page, let's just get across some laggards in the small to mid cap space. Well, there you go. Lake Resources, FDA disappointment from Mesoblast, absolutely getting hammered down a further close to 15% today. Boy, you've got to have really tough intestines to deal with Mesoblast. I've just thought of that. It reminds me of a conversation I had with Isaac Poole from Oriana Financial Services.
That's
what he said in relation to all the volatility that we've seen in bond markets so far. He said you need to have tough intestines. He is calling for the first interest rate cut in the US to come sometime in May. So May 2024. That interview is up online. If you missed it, get his view on how you allocate assets in this very volatile time for bond markets.
Yeah, I was going to say, he's got his doctorate. It's not in gastroenterology, I would imagine.
No, I don't think so. I'll probably be corrected by one of our wonderful viewers. All right. What are we expecting
Not
tonight?
much tonight, really. Palantir, Berkshire Hathaway, though, reports. So that's going to be exciting just because we'll get a little bit of colour about, the entire world, really, in the investment landscape. But otherwise, we start to get Fed speak coming through, which is always with mixed emotions for me because it becomes a bit of a cacophony we're about 6 weeks away from the next Fed meeting. But nevertheless, could be meaningful going into this CPI data.
I like that word, Kyle, cacophony. It's a good one. Underused, I would say. Now, tomorrow, here locally, it was a pretty quiet one on the economic front, but we do get some meteor reads coming from the big banks.
Yes, and consumer sentiment there, business confidence, both will be interesting, especially in relation to two holds in a row now from the RBA. We did see in the weekly ANZ Roy Morgan survey last week, which will also be out tomorrow too. A bit of a pick up in confidence basically off the back of that, but also a bit by way of results, all starting to ramp up now. So Crown's in there, EML. James Hardie actually will be overnight, will it? Or we'll welcome that tomorrow morning?
James Hardie, no, it's tonight. It's tonight.
Yep.
We'll be keeping our eye out for that any moment now. I just put in our group chat some of the expectations for earnings. It is looking to show a fall in quarterly revenue when it reports. It's expected to report an 8% decrease in revenue. But however, the U.S. housing market is such an interesting beast. And it would be interesting to see any commentary that James Hardie gives around that. And I spoke with Harry Watt from Shaw Partners this morning, actually, about EML. You can seek that interview out. It's online if you'd like to get his expectations. He actually said that you could be pleasantly surprised by what comes from EML come tomorrow. Although it's been an absolute, I think I can say this without annoying anyone. It's been an absolute dog for a very long time. I barely use that word.
Yeah, well, it's been a dog in the market. I mean, if you from a technical sense, I guess. So
tomorrow we've got great guests coming up. As per usual, we've got Madeline Dunk to talk us through that read coming from ANZ, the consumer confidence read. Sean Hickman will come armed with his charts, no doubt. We've got Coronado Coal is joining us as well
we're doing that one,
in relation to their results. So look, the list is really long, and I've got a good small caps looking like it's getting lined up as well.
Beautiful. Well, it's going to be a big day. From everything today, you can catch up on your website and app, of course. Tune in for the rest of the week. It's going to be a massive one. Like we said, in the meantime, have a lovely evening, and we'll see you tomorrow morning.